Welcome to another episode of the Miles Pod Morning Money Show. I'm back again with Monty, president and founder of SIC Omaha Shockley Intellectual Capital. How the heck are you, sir?
I'm doing good. How are you?
I'm fantastic. Better than I deserve.
Always got to have the espresso on deck,
Got
baby.
the espresso.
Yeah.
Beautiful. Hopefully people don't mind that I took a Dave Ramsey line there. But let's get right into it. Hot off the presses, Bitcoin hit an all-time high this morning.
Where are we at this morning?
According to CoinDesk, it hit 69K.
Oh,
yes, sir.
I told you it's going to 75. I told you.
So it says this is from CoinDesk. The price of Bitcoin is set a record new high, rising above 69,000 on crypto exchange Coinbase, a level first touched on November 10th, 2021. Continuing a massive wave of buying by the newish US-based spot Bitcoin ETF is likely the catalyst behind what's now historic run higher. The price of Bitcoin sat around 4,500 at the time of the ETF's open for business, January 11th. Following a brief sell, the news dipped to 39. Bitcoin rallied above 50 mid-January after meandering around 51,000 level for a couple of weeks. Price took off again, upside towards the end of the month. And hard to predict where we stop, says early Bitcoin adopter and Galaxy Digital CEO Mike Novogratz. He posted this on X. So what do you think, sir? You still hold on to your original prediction?
You look at the last podcast, I told you, dude, it was at 65 or 64 or something like that. And I said, where's it going? It's going to 75 by the end of the quarter. If you bought, okay, I'm not saying that was financial advice at that point in time, but if you bought and you wait till about 75, that's when you want to pull the plug, because they're definitely going to fire Gary Gensler in no time at all. I'm telling you, just wait for the regime change, and it's a wrap, dude.
Didn't you say it has no value because you can't borrow against it adequately?
It doesn't. We're talking about a speculative market here. It's beanie babies all day. It's trading cards. It's whatever somebody's willing to pay. And these guys, they need their money back. They're trying to exit. That's why they're giving everyone the opportunity, because it was a bad choice until they changed the laws. I'm telling you.
That's what I think too. I think they bought it at like 52 or even 60, and all these financial institutions had a bunch of it, and they're like, yo, we got to dump this. We got to find a way to dump this, but it can't be too obvious.
We got to, like they say, we got to taper off. We got to do some easing out of this bad boy, so we all don't get diced.
100%. Luna, the new Luna that was launched, hit a new all-time high. It's over $1.
No,
if you remember, Do Kwon was like indicted for doing some illegal stuff, very similar to FTX. Dogecoin's going. They just sold a CryptoPunk NFT for $14 million.
Oh, not the punk. Look, I'm telling you this. You want to get into you wanted to be in at the ground level, okay? That's where all this stuff starts. If you want to take a riskless chance at doing something innovative, what you want to do is look at Pi. No cost, you can mine. They say they're going to open the network or whatever by the end of this year. But if you're trying to get into anything crypto, that's the safest bet. Either cash back on a credit card, buying Bitcoin, or just getting the Pi. That's your best option. There's no harm, no foul on that one.
All right, so for folks who don't know, Pi is a crypto project where you can mine this crypto token.
It's amazing.
Yeah, you can mine it. You can mine it from your cell phone, and you basically have to do this once a day to keep mining. And if you refer people, If you validate other people who are mining in your little security group, you can mine at higher rates. The only issue is that you can't officially trade it for USD yet or for anything. It's basic. If you see it on any exchange website or whatever, it's like a IOU right now. So we're waiting for the big transfer to mainnet so that it can actually start getting traded across platforms.
You don't want to sell it. Just imagine Bitcoin when all you could do was buy it or mine it. Okay, before it got popular, any of that stuff. That's where you want to be, right at the beginning. It's led by some professors on the West Coast. I mean, you can't lose on that one. Otherwise, you just be careful, because this stuff is ridiculous.
Yeah, I think it was developed by a bunch of Stanford professors, Stanford or MIT, whichever one. But it seems like Pi for now, they're making money off running ads. So every time you can disable this feature, but every time you go to mine, it'll play an ad. So that's how they're making money right now. And they have over like 4 million, I believe, followers on Twitter. So yeah, it would be great if they could hurry up with that mainnet transfer so that it can actually be traded for other things. So let's move on. There's the overall the stock market is down today. We got sliding prices. Let's talk about why. They're saying that big tech is the reason. Apple's iPhone sales in China plunged 24% as Huawei's popularity surges. iPhone sales in China fell 24% year on year in the first 6 weeks of 2024, according to research firm Counterpoint. The U.S. tech giant's chief competitor in China in premium smartphones, Huawei, saw unit sales rise 64% in the period. This could fan fears of a slowdown in demand for the U.S. company, whose revenue forecast for the quarter was $6 billion below Wall Street expectations. Shares of the iPhone maker were down 2.2% in the pre-market trading on Tuesday and have lost about 10% of their value so far this year, underperforming their big tech peers in the United States. Apple currently trading at $170.25. You, sir, what say you?
What say me on Apple? Well, here's the thing. The life cycle of a cell phone is 2 years. Okay, 2. So the last one they had, that was a good cell phone. That was a good product. I do believe you even purchased it online, right? You had it shipped to your house, correct?
Yeah, I have the latest iPhone.
The latest one, right?
Yeah, the latest one.
So people who bought their cell phones last year, there was more people buying last year than this year. Why? Because the economy is just tougher for the retail consumer. It doesn't surprise me. So on that note, you got to look at the valuation of the company. Have we done anything to warrant where it's gone for the past 5 years? Have we really gotten true value out of this company? So if you own a little bit, that's fantastic. But if you're all in to win, just be cautious, because the life cycle of that cell phone is only 2 years. And there hasn't been really any exciting news other than every school in America adopting iPads since the pandemic, right? Those also have a shortened life period, like 3 to 4 years. So you may see a huge uptick coming into 2025 on those iPad sales.
Now, is the reason for the decline in sales strictly just unsatisfaction with the product, or is it people being unsatisfied with the brand or unsatisfied with the cost?
No, I think it's about people who wanted to be prepared if anything happened again that was weird, right? Tech-wise, whether it was Department of Education, tech firms, the whole nine. So they got their products over the past 2-3 years, and they're good quality. So they're not buying new ones because their old ones, they work. They're doing fine. So I don't see it as a blip. It's just supply and demand. Simple, demand is down because they already bought before. You're going to have a surge in prices the moment that life cycle starts to get shorter and shorter, or a surge in sales anyway.
I just don't understand why the price would dip just because sales in China are down. Like, I know it's a major market, but it's just one little bit of news always seems to set the price down. And then this is another question for you. Why isn't Apple just like at $800 a share or $10,000 a share? How is it at what did I say, 170, 180 right now? Um, why why does it seem kind of low? Like I mean, Tesla is trading. Actually, Tesla's right around the same price, but Tesla was up to like 600 something dollars. Why is it Apple through the roof? Why is Chipotle a more expensive buy than Apple?
Well, remember, it's just what they cut the total value company up into. You got to look at the whole market value. So let's look at what is the market capitalization of Apple? What is it today? Is it still over $1 trillion? Is it close? What's the market cap? Can you look that data up real quick?
Yeah, give me a second.
Okay.
Of course, I get the spinning wheels of death.
All right, hold on. Let me look.
The damn buffer. Yeah.
Let me look it
Out
up.
of nowhere.
Let me look this up. Okay.
All of a sudden, out of nowhere, my high-end system for streaming is buffering.
That's okay. Every time I'm right, no one listens, so it's all right. Okay, so the market capitalization of Apple is $2.6 trillion. Trillion, yeah, with a T. Think about that. 2.6 trillion. Now, what is the probability at such a high valuation that company is going to be able to go to 3? What's a higher probability? It's it going down a little bit or it going up a little bit, right? I think the probability is that when people need money, they don't care. This is a generation of retirees, right? Your mutual fund has Apple in it. Your ETF has Apple in it. Your private portfolio has Apple in it. And when you need money, you just sell. This is a tough time. These are irrational sells. These are not in institutional, just huge sell-offs because the company sucks. It's a good company. And the reason it doesn't have a higher price per share is because look how expensive it is. Look how much it would cost to buy that company outright. $2.6 trillion. Now, if I look at that company and I say, how much money, if I bought the whole thing, how much money can I make per year cash flow off this bad boy after I pay all my bills? Right? That's that net income number. That's all the way at the bottom. What do I need to keep this engine going? And if that number isn't good enough to satisfy my appetite as a buyer, I'm going to look elsewhere. So it's just pure discretion by the investor on where they're putting their money. And you got to remember this too. When it trades on Wall Street, it's irrational all day long because 70% of this stuff is being done by computers. So all they pay attention to is price. So if it goes down like 2%, some financial wizard programs an algorithm that says, as soon as it hits 2%, sell, right? But they don't sell just one share. They're selling an entire portfolio of tech stocks, more than likely. So that's why there's differences in price. If another company came around, it was doing great, and the market cap was only $1 billion, I would say, what's the probability this company could grow its sales and reach and reach $2 billion? Like, would I pay that? Would I buy this company for $1 billion? And is it feasible that in the future I could grow it to $2 billion? I think it's really, really hard for any manager out there, entrepreneur, Elon-ish person, to say, if I bought the whole thing, I know I could grow it to $5 trillion, and that only doubles my money. See how hard that is? If the company's only worth $1 billion, can I double it to 2? That's a much easier thing to do. So that's why you have differences in price more than likely.
Well, speaking of Elon, Tesla, their gigafactory in Berlin shut down, which led to a sliding of their prices. This story is very strange. So apparently in Berlin, Frankfurt, this is a report from Reuters, Tesla's European gigafactory near Berlin halted production, was left without power after what Elon Musk called an extremely dumb suspected arson attack that set an electricity pylon ablaze close to the site early on Tuesday. The blaze southeast of the German capital, which did not spread to the Tesla site, the U.S. electric vehicle maker's first manufacturing plant in Europe, was extinguished by the fire brigade, police said. A spokesperson from Tesla confirmed production had stopped and the site evacuated. Tesla shares were down 2.8% in pre-market trading. It is down to 177 at 5.5, over 5% down so far today. I mean, is this really something that moves an entire company stock price down 5%? The fact that they had to pause production for a couple hours while a fire brigade put out an arson attack? Like, really? Really?
No. They could just buy a new building if it's that bad and just move it across the street. It's not a big deal. But it's, hey, if you think the value of Tesla is going up and a little bump like this makes the price go down, shake some people, go ahead and buy some more because you're just getting a cheaper deal.
So you think it was a short seller that was trying to short the stock and they paid somebody to set the Berlin factory on fire?
There's a short seller out rod and said, look, we're gonna create an explosion here to try and manipulate the stock price. Absolutely feasible. $1 million on a $10 million trade, whatever they spent, well worth the money if they recoup it in a few days. Just as long as nobody got hurt, right? All these businesses have insurance. Think about that. You don't just open a business without insurance. So any type of problem you have, if it's a disaster, it's already baked into the business model. So,
well, according to the article, the local media said that a far-left activist organization called the Volcano Group claimed responsibility for it and said that they were eco-terrorists.
Eco-terrorists.
Like basically stopping production. So they're trying to stop production on electric vehicles to save the environment. It just, that doesn't add up. That seems pretty stupid to me, if that's really who was up to this.
That's a pretty far-reaching conclusion. I mean, anybody can go to jail for that too, so it's a really high-risk activity. I don't know why you would do that. Why you would risk going to jail forever for what? The guy he's the leader in the alternative energy space. Period. We're talking solar, transportation, as well as space travel. So
yeah, and Starlink.
That's probably not the best person to start attacking if you're concerned.
Well, he's getting attacked from everywhere. I mean, he's got billions of dollars in legal fees to the opposing attorneys, their offices want like $6 billion worth of Tesla stock. And then I think he's getting sued by the former Twitter executive team for like 128 million. I mean, this guy's getting pulverized from seems like every which way. So should people that hold Tesla stock, like the faithful, the long people going long on Tesla, do you advise that they hold on to this, or is this a sign that Tesla stock is going to continue to plummet?
I'll tell you the most important component to Tesla's future has to do with, now remember Elon's age, okay? You deal with one episode of dementia or something that alters your mental state. It usually happens when you get older, right? Alzheimer's. The most important component to Tesla's future is for Elon to map out his succession plan, because as long as the values of Tesla are upheld into the future, that's what you have to protect. The moment it stops operating like Tesla operates today, then you have a problem with that valuation, because it won't be the same Tesla of the past. You get into old habits really quick when you inherit money, and to me, that's the biggest risk Tesla has. Is it communicating what exactly is going to happen if Elon decides, hey, I'm tired now? He's a very high performing guy. I mean, he manages more than one, as a CEO, more than one company from a very high level.
Yeah, billion-dollar companies, not small companies.
Yeah. We're not talking itty bitty guys. He did that in his 20s.
So people should hold this stock. You think they should go along with it, or do you have an exit for this?
No, you definitely want to hold Tesla. But like I say, for most people, if you're making a 10-15% return on your investment, it's unusual. Every year you're doing fantastic. So be comfortable taking profits. Sometimes you got to deal with that. You're not going to win all the time. You got to pull back sometime. And when people get older, right, the company, think about 30 years, could not be doing as well as it is now. So you got to be careful with what you're doing.
Well,
the higher the valuation goes, the more you can borrow against those assets. If the company keeps growing, it's a win-win situation for the economy.
Well, speaking of China, they did something that I think is super smart. According to CNBC, China sets a GDP 2024 target of 5%, plans to issue ultra long special bonds for major projects. Premier Li Qiang, who delivered the report, also pledged that China would remove restrictions for foreign investment in manufacturing. China set
that's a win.
Let's see here, deficit to GDP ratio of 3% for the year, down from a rare upward revision of 3.8% late last year from original 3%. The work report also said Beijing will issue 1 trillion yuan, or 138.9 billion in ultra long special treasury bonds this year to fund major projects aligned with national strategies, while 3 trillion yuan of special purpose bonds for local governments will be issued this year, 100 billion won more than last year. Wow. I really like this move. Do you like this move?
I do. Anytime you allow more participants, you break down the barrier of entry for other investors to get involved. it's a proactive move, and it's unusual for China, to be quite honest. So it's a very good move. They also have a looming housing crisis because they have tons and tons and tons of developments that basically don't have any inhabitants. And, you might have a little bit more if you let some people stay there, if you allow them to invest. And I think that's why other countries, to allow foreign investors, just do well. And you have a similar problem in Dubai. They're overbuilt, oversubscribed, borrowed to the hilt, and how do you turn the corner? So I think it's a good move.
Yeah, I don't understand why since we have such a budget deficit and a debt, a surging debt, national debt that's through the roof. Why don't we come out with more new products? Like this is a new product of China. It seems like they're proactive about trying to lessen their financial woes as a country. Why aren't we doing this, Mont?
Well, if they offered the product to the marketplace, why aren't we doing it? Is because we're usually reactionary. We're not proactive participants. We're reactive participants in the global economy. And why is that? Because we're mainly a service sector. First, we have to observe, and then we react. Very rarely do we present the market something first and watch it hypothetically play out and then make adjustments. And that's a failure of leadership. Like I tell people this over and over and over again. The current establishment of investors are not qualified from a risk management perspective to manage the assets they hold. They're inappropriate. They do not have the skill set to think like this. And it's not their fault. The reason is they come from a different time period. And that's what has to change. In order to get that ball rolling, we got to have some serious, again, it comes down to succession. Who you're passing the baton on to, whether that's political finance, institutional finance, personal finance, it has to be an appropriate choice to manage the risk for everyone's sake. And that's why you have the failure here. That's why we don't act on stuff in the US right now. That's why China is leading the global economy and we aren't.
Well, before, not too long ago, there was a lot of like China evangelists or financialists, I should say, who were trying to get companies and get, big corporations to invest more and more in China. Do you think that something like this excites foreign investors to want to start putting money into the Chinese economy again?
It excites countries who have sovereign wealth funds. So if they have pension systems or they make investments as governments, it excites those people because it's a cash flow thing. The longer the bond, which is the debt that they're issuing, if it's a long term, there's a pretty good chance that China is going to be able to pay those coupon or the interest payments on those bonds. And then at the end of that term, you get the face value of the bond back. So the probability that China is always going to be able to pay their bills, it's pretty high over the long term. Even if you have 1 or 2 years in default, you can still recover based on the size of the nation.
By the way, that tie knot is impeccable. That is, how in the world do you do that? Like, do you mind can you like unfold that? Can you untie it and then tie it again so I can see how in the world you do that perfect knot?
It's an inherited skill set.
No, let me see. Hold on. Let me see you untie the tie and then put it on, because this whole time I'm trying to figure out how in the world is this guy's tie so perfect.
I'd love to show you maybe on the next episode, but I got an 11:30, so I got to stay.
Let me see. Come on, let's see you.
I got to stay equipped for the
All right,
game. Okay.
all right. Can you at least motion like with your hands, pretend you have an invisible tie? So how do you do it? You do right over left first. What do you do?
Honestly, I don't know because I've gotten so used to putting on ties. And you remember, I've had 3 eye surgeries in the past 2 months or since December 15th. I've had 3 of them. So when I'm tying my tie, it's literally just my fingers. I don't look I don't look at the mirror.
That's ridiculous.
I can't see. So it just and that's what you get.
Yeah,
So
your tie game is impeccable.
It-
Where do you get your ties from?
it's muscle memory at this point in time.
Yeah.
I'm getting all my ties from the Men's Warehouse. Love that place. Can't get enough.
Dude, you're not. You're
Men's
not getting it
Warehouse.
from the Men's Warehouse.
You go to
Stop.
Men's Warehouse, you go to the clearance section. They always got good stuff in there. It's high quality.
Really?
Yeah.
No way.
Oh yeah. And people don't buy ties anymore. You know, they don't want to be clean. Like, you know, so I'm like, okay, give me a couple of them.
I never thought about that. Going to the Men's Warehouse clearance section and trying to snag a few ties. See, but why wouldn't you just go to like Goodwill if you really want to save money, or is that too lowly of a place for someone like you?
Oh no. I go to Goodwill all the time. I got a $675 Tommy coat, a ski jacket in my closet. That's impeccable. I bought it for $4 at the Goodwill. So you got to have a good eye for what's in there.
What do you think the best tie on the market is? Like, if someone asked you, hey, I really want to get a nice tie, what's the top of the market? Like, what would you advise them to buy?
For a regular purchase, I can't steer away from Men's Warehouse. You got to check them out.
No, but I'm just saying, like, if they wanted top of the line, they weren't happy with Men's Warehouse, they're like, no, I want to go straight to the producers. Are you taking them to Brooks Brothers? Are you taking them to Ralph Lauren for a tie? Where are you taking them?
Well, Joseph Abboud doesn't have retail stores, so you have to purchase these types of ties in bigger retailers that offer that selection. But you can go to JCPenney, you go to Macy's, you can what are some of the other stores? You can go to Dillard's, you can go to Yonkers, you can go to all those places. You can go to Men's Warehouse.
Wait, what is Yonkers?
Yonkers, dude.
Hey, what is Yonkers?
This is the opportunity at the Bible Belt that people don't understand.
Wait, you said Dillard's
out here.
Wait,
okay?
Dillard's? I've never heard of Dillard's before.
Dillard's, they tried to kill it. They tried to take them out, but they're still running game. It's a good store.
Yeah, your
Yonkers
game is impeccable.
Most similar to Nordstrom's.
Oh, okay. All right.
Another place you can get some Joseph Abboud apparel. And no, I not paid for that at all. So I'll send him an invoice later.
Well, let's talk about some more speculative investments. Let's talk about gold, sir. So according to CNBC, gold scales all-time highs and can go even further. Gold prices push higher Tuesday, which is today, after futures pricing for the precious metal notched fresh records in the previous 2 seasons, with analysts seeing strength lasting at least into the second half of the year. It closed Monday above $2,100 per ounce for the first time. In London, spot gold was trading 0.7% higher at $21.29. In a Monday note, analysts at Citi described themselves as a medium-term bullion bulls, calling a 25% probability of gold averaging a record $2,300 per ounce in the second half. Citi describes gold as a developed market recession hedge and increasingly sees tailwinds from uncertainty from around the U.S. election in November. However, analysts at Berenberg noted that Donald Trump A victory for Donald Trump in the election would provide a major positive for gold, with further support for the safe haven asset from volatility around the ongoing wars in Ukraine and Gaza. Your take, sir?
So with innovation comes higher demand for gold. Why is that? Because you're talking about every semiconductor, every chip manufacturer, every cell phone, every computer's got components in it that are gold. So if you're interested in the gold play, you got to think outside the box. So if demand goes up and we keep the demand perpetual, who's most important? There's only a finite amount of gold, unless Elon takes a spaceship into space and starts mining on meteorites. There's only a finite amount of gold on the planet that we can get our hands on. So companies that have gotten very skilled at recycling old products and pulling out the gold and reintroducing them into newer, more innovative products, that's where I would start looking for investment ideas. But if you're going to start buying gold, there's only one guy you can trust. That's Peter Schiff over at, I think it's PAC. I forgot the name of his fund, but Peter Schiff is the guy to go if you want to invest in a fund with gold in it.
Let's see here. Peter Schiff. Peter Schiff. Gold fund. Let's see here.
He even used to sell credit cards that were
okay. Euro Pacific Capital.
There
Gold
you go.
Fund.
Euro Pacific Capital.
Yeah.
Very good manager in terms of how he manages the gold play. He has other commodities too, silver, precious metals. So yeah, look for a fund.
But isn't that telling? Isn't that telling though about what the future of the market could be? Like if gold is soaring, doesn't that mean that people are freaking out about the future of the economy? Because as it said, it's a recession hedge. So the fact that there are so many people trying to buy gold now means perhaps that they think calamity is coming, and the issues abroad are causing people to panic and lose trust in what's currently going on in our economy now. I mean, the fact that they co-signed with Trump saying that he would be good for gold is very interesting.
Well, here's the thing. A while ago, you wouldn't know this, but Russia started accumulating gold faster than any other nation on the planet. In fact, I think they're now they might be third in terms of how much gold they have. Now, why did they do that? Because they were trying to restore their economy. So what they also did was they paid down all their debt. I think they only have 5% of their GDP is tied to debt, but they had to start backing their currency by gold, which is the reason they wanted to stabilize their currency. Now, this is all before the invasion to Ukraine.
That's crazy. That means Russia is balling, they just straight up moonbagged with gold. If it hit all-time high and they bought it before the war broke out.
Yeah, they bought it before anybody cared. And the retail consumer doesn't, we're not rushing to buy gold, right? But we are rushing to buy cell phones, laptops, computers, stuff like that. Cars, the price of cars goes up. So by default, the price of the gold inside the computer system inside those cars goes up. It's more of it's following inflation versus a company popping like Viking Therapeutics, where it's just up 90%, right?
Right.
So that's why they call it an inflation hedge, because it doesn't really move up or down like a rocket. it's more stable over the long term. It moves with inflation. It moves with demand in the economy, which in general is never more than 2 to 3% increases in inflation. But
Russian Federation is like fifth. They have two. No, this looks like. Oh, this must have been a typo. But 2,333 tons of gold. Russia overtook China, and this is according to Investopedia. Russia overtook China as the fifth largest holder of the yellow metal in 2018. Russia's increase in its gold stores was seen as an attempt to diversify beyond American investments. Russia mainly sold U.S. Treasury bonds to buy the bullion.
there you go. So imagine if you have a country that now has sanctioned you, right? I've sanctioned your country. How do I trade if the US dollar is the reserve currency that's exchanged all over the world, and I sanction you and I say you can't do business with us right now because of the way you're acting? Those other global partners say, well, you got sanctioned, so how do I trade? Now, I love Ether to an extent, but I don't think crypto is the answer. So you got to have some other commodity. So you trade with gold. That's how you get people interested in what you're doing, which is probably how China and Russia have stayed relatively at peace up until this point.
Yeah, there was an interesting story about a popular, I guess you could call him YouTuber, but business YouTuber who just, I guess he got a divorce, but after the divorce, his ex-wife invited him to just homeschool their kids and travel all over the world, which is interesting. So he says okay. He goes on this. I think they were abroad for like 2 years, and then he said they exchanged a lot of cash or stock for gold, and they felt like the gold had more tradability abroad than anything else, than the American dollar. Like basically he was saying the American dollar value, the power of the dollar is diminishing rapidly, so people should buy gold to be safe.
I mean, there are countries like India who have vending machines of gold. You can literally go to a vending machine and buy gold out of in the mall. So it's an easier exchange sometimes when the currency you're using is in question. Yeah, you also got to remember too, other foreign nations have a lot more problems with counterfeiting. So
there's some really good counterfeiters though that are here in the States. So I mean, we're pretty tough on counterfeiting. Like we go in, but imagine the vulnerabilities of other countries.
Right.
Yeah.
Yeah.
Wow.
It's tough. We're as hard as it is to say, the stability in this nation is really undervalued. If you went to other countries, you would understand how difficult sometimes it can be to do business.
Lastly here, I think you're going to like this. So the Consumer Financial Protection Bureau is banning excessive credit card late fees. The Consumer Financial Protection Bureau finalized a rule today to cut excessive credit card late fees by closing a loophole exploited by large issuers. The rule will curb fees that cost American families more than $14 billion a year. The CFPB estimates that American families will save more than $10 billion in late fees annually once the final rule goes into effect, by reducing the typical fee from $32 to $8. This will be an average savings of $220 per year for the more than 45 million people who are charged late fees. So this is actually a part of a move by the Biden administration to help American families. Do you approve of this? Do you think this is a thing that can help Biden win again? I mean, I'm actually really excited about this. I think charging people $40 in late fees is something very small that most politicians wouldn't even look at, but has a substantial impact in people's lives. Like, I think this is a slam dunk by the Biden administration to get this done.
If he can do it before the election, then it would help him win.
Yeah, it's done. It passed. So as of today, you can no longer do this.
This is current legislation. This one.
Oh yeah, this is literally today. Today, they finalized the rule today.
So
you gotta cut it to $8. That typically it's reducing the fee from $32 to $8.
I like it. I like it. However, and this is my plug for the presidential seat in the future. The biggest issue with credit card companies is we have a punitive system when it comes to credit. We do not have a reward-based system. So people are incentivized for proper credit utilization through punishment versus incentive, right? Versus reward. What should happen is there should be a law passed that says if I, and think about this, what they're doing is they're devaluing all credit card companies immediately. So in the future, now credit card companies aren't going to be making as much money selling credit card services anymore because it just went from 30 to 8. Is that good? Maybe, maybe not. What's more appropriate, and again, this is my plug for the presidential seat in the future. You need a system that says, okay, if I'm late on anything, the moment I pay that down, I get things back up to snuff, it's taken off my credit report.
Right. Like if I'm paying this fee, that should be the only penalty. You shouldn't also be allowed to report that I'm late on paying the card.
Not only that, you can report that I'm late paying it, but the moment my account is current, my credit report should be updated as well, and it should be made whole.
I see.
It should be deleted.
So it goes both ways. So if you're going to report that it's not on time, you should also report that I'm good now and my account is current.
Exactly.
Yeah, I get that.
Even with the house, that's only fair. Otherwise, why does a credit bureau get to punish me for 7 years if after 6 months I've paid my debt back?
Well, did you hear that Discover just sold? Discover got bought by Capital One.
Yeah, I heard that.
Which is great for Capital One. Like, they're clearly killing it. They're clearly just killing it right now. But I'm worried about Discover as a brand because I heard so much good things from employees that work there and how great the environment is. And so you wonder if all that's going to go to crap now being under this big Capital One conglomerate. But I'm assuming that move was made in anticipation of this legislation.
Without question. I mean, Discover could have been looking for a buyer because of this. They knew that, well, based on the fees we make in our revenue, what would this do to the impact of this company? So what's the best move? So the board probably got together and said, look, we need to find a strategic buyer to save whatever we can of Discover if this legislation goes into play. And then too big to fail is your fault.
Right.
Not ours.
Their compensation must have been tied up in those fees.
Oh, absolutely.
Yeah.
Absolutely. That's why I don't really, if you mess up, I get it. People make mistakes, but you got got to be held accountable, right? Now, if you do whatever you need to do to bring your account whole again, that's where I think we should reward retail consumers for trying to get back on track, for doing the right things. You know,
Well, this is a perfect jumping off point. We're into the personal finance corner with you, Mott. We're talking about credit card debt. What are some ways you can advise people to improve their credit card situation, whether it's to bring down their debt or to improve their overall credit score? What are some retail or personal finance strategies with credit?
So credit card debt can be really tricky, especially in a difficult economic environment. But the rule of thumb generally is you don't want to have more than twice your monthly income in credit card lines. So, entrepreneurs who, are trying to start companies, it's kind of a different field. But for the personal finances, you probably shouldn't go overboard. I know the offers are out there and it seems sweet, but you probably shouldn't go too far into debt with credit cards, because trying to dig out of the trenches can be a real nightmare if your income isn't going up at the same time.
Well, Monty Shockley.
It's also good. I'll give you another tip real quick.
Yeah.
Let's say your monthly payment is $50, right?
Mm-hmm.
You can make 2 credit card payments in a month. 2 weeks you pay 25, and the next week you pay the other 25. What you essentially did was you lowered the amount of interest you paid by paying some of it sooner. So the sooner you can pay down the debt, even if it's a little bit, it'll start cutting down the interest that you're going to pay long term. And it's also seen as a proactive step by credit card companies to give you more credit in the future.
Yeah, talking to people from other countries, the concept of credit is just really foreign to them. Like, they don't understand why it's essential. Like, your credit score is essential for buying a car, a house. Like, they don't get it. And I don't think a lot of Americans understand that this is a very unique financial system to the United States, whereas in other countries, it's not so heavily based on credit. Like, I don't even know if other major countries have a credit system.
Yeah, the US isn't unique in terms of how the banking system works, that fractional reserve system. But if you apply those same principles to lines of credit, to credit cards, I mean, you can use credit cards globally now. There's a terminal everywhere. Now, what I will say is, what's better to do is to build up assets, right, in a stock portfolio or bonds or whatever. Build up assets and borrow against those assets. Usually it's much cheaper, and you don't have to sell what the investments that you've been saving for. So instead of getting the $2,000 credit card and paying 30% interest, usually you can borrow against a stock portfolio and only end up paying maybe 5-6%, sometimes 3% interest for a loan against your own assets. And then you avoid the trap altogether. If there's a problem, then what will happen is they'll sell your assets, but you're at zero versus negative. That's a much safer play. If you can get to that point where if you don't pay them and they take what you have, at the very least, you're still at zero. That's better than going negative. You
What
can
about
start
these
it.
what about these points people? Like, can you really ball out of control with like your points that you accrue? Like, have we gone a little bit crazy with the points?
So here's the thing: if you run a small business, you know, at the end of the year, you could have a really big tax bill, right? So if you spend money on something that can be deducted and it's useful to you, you can reduce that tax liability. So in that situation, points can help you, but you have to, it's just a perk. You know,
See,
it's like having free sprinkles on an ice cream at Dairy Queen.
but this is why every American who's serious about their financial situation should start a company, because then you can take advantage of all those benefits. You like
Absolutely.
when you create a company, you're
Absolutely.
essentially like creating another human being, because it's going to have its own credit score, its own social security number, which is the tax ID, right? Or what is it called? The EID, is that what it is? Employment Employer Identification System, or T, is it that the TIN or what, you know what I'm saying? You register your business, now you can take advantage of all those opportunities. I mean, that's a key thing that a lot of people do with nonprofits. Well, they'll help like start a nonprofit, and then they'll utilize the nonprofit as a way to expense everything, and then they'll pay themselves through the nonprofit as well, because it's under a totally different tax structure. So, but every person should do that. Do you agree with that? I think I heard you agree with that statement.
Absolutely. If you're if you manage the risk properly, um, you can pull money out of the system. No one cares anymore about anything except what does that credit report say? What is the number? What's the history? And that enables the computer to decide, yes, we're going to extend credit or we're not going to extend credit. Just so long as you have a plan and a purpose for the money you're borrowing, which includes a plan to pay everything back, you're good as gold. Like that's what you should be doing.
Yeah, people, you need to wake up. You're broke. You're broke.
we're,
Everyone, you're
we're all
broke.
broke. Everybody, yeah.
You're
That's
broke.
the other thing. You
You're
got to pay that
broke.
stuff back.
If your income isn't coming in the form of a loan that's that's borrowed against stock, you're broke.
Right.
If your income is coming from an employer, you're broke. You need to wake up. It's March. It's the end, almost the end of the first quarter of 2024, and you're still feeling comfortable kicking up your feet, watching, Netflix, and thinking everything's going to be okay and it's just going to magically all come together. Stop playing around and get in contact with somebody who can radically change your financial situation. Don't get on your wife's case and yell at her because she's not picking up stuff around the house or not making enough money. No, it's on you, dude. You got to step it up. You need the help. The way that your wife walks around your house, the glow on her face is indicative of the environment that you're providing for her. So she is walking around in the bonnets and tattered PJs all day instead of the Victoria's Silk Secret stuff that you want to see her in here. You want to see her in. It's your fault. It's your fault because you don't contact SIC Omaha. You don't call Monty and say, hey, I need a comprehensive financial strategy for my personal finances. And I'm also want to start a business so I can take advantage of the strategies that we're seeing here. But you want to yell at Biden. You want to yell at Trump. You want to yell at AOC and JB Pritzker and all these people because you're broke, because you're lazy, because you're absolutely lazy and foolish and moronic. And all you do is eat McDonald's cheeseburgers all day and expect to be fit and healthy. Get off your rear end and pick up the phones and call this man or call whoever you trust. But here's an opportunity to change it all around. Sorry, Monty, how can people reach you?
It's very simple. SIComaha.com. I'll get back to you within 24 hours. Not a problem.
Sounds great. Monty Shockley, thank you so much for being on the Miles Pod Morning Show yet again. I can't thank you more. This is fun. And my apologies to Matt Damon. We ran out of time. Thank you, ladies and gentlemen. Have a good one.